Hi everyone, Ali here with another video on how to analyze a stock in 5 minutes. So first of all, I would not analyze a stock for 5 minutes and go ahead and put my money into that company. So this is just for me to do sort of like a smell test. If someone tells me about a company or I hear about something and it intrigues me, I would want to do a quick and dirty analysis just to understand the company. And if I really like what I see, then I would go ahead and probably go through their annual report and go through their financial statements and really try to understand it, and then put my money into that company. But just based on 5 minute analysis, I would not put my money into a company. So, just like in our practical lives, we don't do that, right? Let's say you are planning a trip, and you're looking for airline tickets, right? You would not just look at just one. You would not go to one website and just buy the tickets from there. You'd probably check multiple websites, even though every single website you go to, the ticket's going to be the same price, right? And then let's say you're looking to lease a car, even though you're just going to have that car for 3 years most likely, and you're going to return the keys after 3 years. And you'd go around, you'd go to different dealerships, you would test drive the car. Let's say once you've honed in on one car, you might still want to go to different dealerships and try to see what's the best deal you can get. Can you save 10, 15, 20 bucks a month on that car? Or they can give you a better package or more mileage or what have you, right? But when it comes to stocks, a lot of times we don't do that, right? We would hear a hot tip, or we would hear someone else talk about that company, and we would think that it's going to be the next best thing, and we would put our money in there, and no wonder why we lose money, right? So that's what I try to avoid when I'm doing this. So first of all, when I'm going to cover four stocks: two airlines, Delta and Alaskan Airlines, and then Microsoft and Facebook. But first of all, before I look at anything else, try to look at the long-term chart. So here I have a 16-year chart, just randomly. I didn't really try to pull up a 16-year chart of Alaskan Airlines here. And right off the bat, I can see that, the stock moved sideways for, 6 years or so, between $4 and $10. And then around 2010, it just started going higher, right? And it went from $10 all the way to $100. And then since 2017 up until most recently, before everything started going down because of the coronavirus, the stock went down from 100 and traded between 60 and 70. So this doesn't give me a lot of comfort that why did it drop so much, right? What was the reason behind it? This is what I would want to understand it once it passes my smell test, and I would want to understand what happened over here. The next stock, Delta, we can see that it started trading around 2007. But when we think of Delta, it doesn't, it's not a new company. It's been around for ages. So why did it just start trading in 2007? And the reason is the Delta went bankrupt in 2005, and then it emerged from bankruptcy and started trading in 2007. So the shareholders that owned Delta prior to the bankruptcy, they lost everything, and then the debt holder became new shareholders, and this is where the company IPO'd around 23 or 24 bucks, and after 13, 14 years, we are right at the same point of $23. So it took like almost 7 years for the stock to even go above its IPO price. And then, it's been trading higher, but, in the past 5 years or so, Delta has been around between 40 and 60. So, 50% return in 5 years. Everyone has their thing. Right now, of course, with the drop, it presents a great opportunity, but then it all depends on how sustainable these airlines are, and if they're going to require funding from the government, bailout from the government, and what would it do to the equity of the shareholders? So the next one is Microsoft. Microsoft, and you can see over here, for a long time, and I know if I were to go back even further, Microsoft, this is after the dot-com bubble, it came down, and then it was stuck, the stock was stuck between 20 and 40 from, let's say, 2000 all the way to 2014. The stock did not do anything. And then until recently, the stock started rallying after 2014, and and this is what I would want to understand. Why has it started rallying? What's the what's the what are the new products? I know one of them is their cloud computing, where they're competing with Amazon, with AWS in that space, and amongst many other products that Microsoft has, and it started going higher. So looks good. And then finally, Facebook, the fourth one. And we know that it went public somewhere around 2012. Initially, it went down. If people remember, it was because the big to do was that first of all, they didn't have that mobile app. Once they had the mobile app, then they couldn't really monetize advertising on the mobile app. And then once they fixed that, then the stock turned around and started going higher. And at the end of the day, it's all about monetization. So as soon as they fixed that, the stock moved higher. And then this is the period over here where they had those privacy issues, and they were subpoenaed by the Congress and the Senate, and they had a lot of hearings going on. So this gives the big picture. Then the next thing I would do is go to Yahoo Finance, put in the ticker symbol. I would arrive at this page, which is the summary page. And when I look over here, I'm not thinking of just buying 50 shares or 100 shares. Think of yourself as paying $15.5 billion to buy the entire company. You're going to be the single shareholder. It's just going to help you understand and think more clearly, and these numbers are then going to start making sense to you once you try to simplify them, right? Don't think of these as big numbers. Just focus on the first two numbers, or if it's in millions, first three numbers. So you're going to be paying $15.5 billion to own the entire airlines. Now, because we're looking at two airlines, so let's compare them side by side. Whereas Alaskan Airlines, you're going to be paying $3.7 billion to own the entire airline. So here I'd like to point out that Alaskan is a $30 stock, whereas Delta is a $24 stock. So, a lot of times people say, "Oh, I don't want to own a more expensive stock. Maybe I'd look for an airline, but I'd look for a cheaper stock." But that doesn't mean you are buying a cheaper company, right? So Delta is a $15 billion company. Alaskan is a $3.7 billion company. So then the next thing is I would go click on financial statements, and I would go to the financial statements. So what do financial statements comprise of? There are three statements: income statement, balance sheet, and cash flow. Income statement is simply what did they what are the revenues that they got from customers, and how much expenses did they have to pay, and did they make any money or not? So did they have any net income or net loss? That's it. Very simple. Cash flow is analyzing where are they getting or spending their cash? Where are they getting the cash from, and where are they spending the cash, right? So because it's an airline, right? They take people from one place to the other. So the cash flow, after spending all the money, paying for employees, paying for the lease of the planes, they're going to get cash flow from operations. But then they have investments, and then they have the third section in a cash flow is financing, because me as a shareholder has given them money, or they might have borrowed money. So that's the other section. So three sections in a cash flow statement: cash flow from operations, money coming in, whether they're paying for investments or they're making any investments. And the third thing is financing, where they're either taking money from shareholders or loans. And then finally, the balance sheet is simply what assets do you have and what liabilities do you have. And if there are more assets than liabilities, that means there's more in your pocket, right? Which is known as equity. So starting off with an income statement, sorry. So income statement, not getting this right. We can see that in 2016 the revenue went up from 39 billion to 41 billion. As I said, just focus on the first two numbers, 39 to 41 to 44 to 47. Makes it very easy. Don't let the noise confuse you. And then after all the expenses, you made, as one shareholder, made 4 billion, 3.5, 3.9, and 4.7. That's what you made. So now after you're collecting revenues and paying for expenses, and that's what your net income is. So what is the cash? Then after doing everything, I want to look at my bank account and how did the cash go up or down, right? I want to look at my bank account. So this is the cash in the bank account. So here's that same net income number: 4.3, 3.5, 3.9, 4.7, right? Same income numbers. So after all said and done, what is my cash impact? I had net cash flow from operations of 7.2, 5.1, 7, and 8.4. That's how much cash I generated from operations. So let's do the same thing with Alaskan Airlines. Um, I would look at my income statement over here too. Obviously, because it's a smaller, we saw that one company is a $15 billion company, the other company is a $4 billion company. So obviously their revenues and expenses and cash flows are going to be different, right? Otherwise, if one company is 4 billion but their cash flows are the same, then that company is undervalued and should be paid more for their cash flows. So over here, revenues went from 5.9 to 7.9, 8.2, and 8.7. And net income went from 814 million to 1 billion to 437 million to 769 million. So over here, income went up, but then it took a big dip and then it went up again. So this is what we were looking at, that in 2017 the stock peaked at 100, right? And then it dropped in 2018 and it has not recovered since. So this is where the fundamentals come in, that you can look at a stock chart, but here is that dip in income, and here's that it still hasn't gone back to 1 billion. So why should the stock be trading at 100? So now these income are let me look at my bank account, that after all said and done, what is my net cash impact? But the good thing is that it's not that big of a, well, the cash flow shows it as well a little bit. Went from 1.4 billion to 1.6 billion to 1.2 billion to 1.7 billion. So from a cash flow perspective, it's higher than 2018. So the prices, so the price of the stock is much lower, but from a cash flow perspective, it's better than 2018, or sorry, 2017, when the stock was at 100. Now, when we look at Delta, 8.4 billion, but Delta had a steady increase It had a dip in 2017, but it has had a steady increase in the past 2 years. So going down, so what is this company going to use the cash flow for, right? Next thing. Once I have this cash, what am I going to use it for? And same thing on Alaskan Airlines. Here, that was from cash flow from operations. What am I going to use it for? So the big ticket item is first of all, I am look at this, right? This is debt repayment. So Alaskan's debt probably went up over the years. It went from 250 million debt repayment to 400 million to 800 million to a little over $1 billion. But then they have been very steady with their stock buybacks of 200 million, but then they lowered it to as the stock went up, I guess they lowered it from 75 million to 50 million, and they just upped it to 75 million. And then dividends being paid, right? 136 million, 148 million, 158 million, 173 million. So dividend growth is there. A lot of times people invest just for dividend, that, oh, this stock has a great dividend yield, right? But these dividends could be in jeopardy if the cash flow from operations isn't there. If the company doesn't have cash and they have to pay large amount of debt, and how are they going to pay dividend to the shareholders? So as we can see over here, in Alaska in 2017 had 1.6 billion in cash flows from operations. After getting passengers from one place to the other, they had 1.6 billion dollars, but their debt repayment was only 400 million. But now they have 1.7 billion in cash flows, but $1 billion in debt repayment. And it makes it smaller, and the piece available to shareholders goes smaller and smaller. And then therefore the dividends are increasing, but we can look at the spread between the two numbers. So let's go over to Delta and see what they have been doing. So their cash flows went up. Cash flows from finance operations went up, as we saw, from 7 to 5 to 7 to 8.4. But the debt repayment went from 1.7 to 1.2 to 3 to 3.3. So constantly their debt repayment is going higher. So, more and more of the cash that they're generating is going towards debt repayment. And then look at the amount of shares buyback that they've been doing, 2 billion to 1.6 to 1.5 to 2 billion, as the stock's been going higher, as opposed to what we were seeing in Alaska. There hasn't been a lot of shares buyback by the management. And then here are the dividends being paid: 500 million to 731, 900 to 980. And so after looking at 2019, 8.5 billion in cash flow, 3.3 billion in debt repayment, and 2 billion in shares buyback, and a billion in dividend payments. So 3, 4, 5, 6, almost like 6.3 billion out of 8.4 billion is being spent on debt repayment, shares buyback, and dividends. So they're left with just $2 billion in cash, which is right here. So these are the kind of things that I look for, and then I would go to the balance sheet, and I'd want to, the main reason to look on the balance sheet is, so total assets for Alaskan Airlines going higher, but are they going higher because of the positive cash flow, or are they going higher because the debt is also increasing? So overall liabilities increased from 7 billion to 8.6 billion. Assets increased from 9.9 billion or maybe 10 billion to 13 billion. So assets increased more than the liabilities increased, And here is that long-term debt. So their long-term debt is looking good because it's going down, right? So it went from 2.6 down to 1.2. Whereas Delta, let's look at Delta. Total assets going from 51 billion to 64 billion in 4 years or so. Whereas their total liabilities going from 39 billion to 49 billion. So 39 to 49, that's like a 10 billion increase, and 51 to 65 or 64 and a half, that's like a 15 billion increase. So good. But the difference is, the debt is $8.8 billion over here. So now going over to the equity section, because you as a single shareholder, this is what you have. So your equity in the company went from 12.2 to 15.3, whereas in Alaskan Air, it went from 3 billion to 4.3. Right? So this is how I would analyze a company, and just by looking at it, it seems like Alaska's management seems a little more frugal, that they have not been doing a lot of shares buyback, whereas Delta has. So it would be more comforting that Alaska's management seems more prudent, and larger debt repayments are showing in their balance sheet that their overall debt is going down. It went down from 2.6 billion down to 1.2, whereas Delta's cash flow shows that their debt repayments went from 1.7 to 3.3. So now let's look at their long-term debt. It went from 6 to 8. So their debt went higher, while their debt repayment went even higher. So why are they paying more towards debt, yet their debt is going higher, right? Because they might be using more leverage to buy back shares. So these are the signs that you can see, and you can have conviction when you're drilling down and looking at. This is like a quick and dirty, obviously, because I'm explaining to you and it's taking longer. But if I was just doing it for myself, I would just see all these signs and I would say, well, Alaska looks better to me than Delta, because Delta's management just seems like they're just spending money on buybacks and propping up the stock price. So so that's that. And then same is the case when it comes to the other two companies. So Microsoft, I would put in the ticker symbol, arrive at this first page. It's a $1.4 trillion company, large company, right? But we've seen from the chart that from starting from 2014, the stock has just skyrocketed, right? It just went up like a learning curve. So here is again the same drill. Going to that financials tab, I want to see revenues going higher, and we can see that in 2016 revenues were 85 billion. Then it went to 89, 110, 125, and now at 135. So that is probably like 80% increase in just 4 years of from for revenues. And just going down towards net income, and that's 16 to 44. 16, 21, 16, 39, and 44 billion in net income. So the kind of growth that Microsoft has, we didn't see that in airlines, right? Um, so Facebook, because these are both technology companies, so we can just look at them. Facebook being $510 billion company, and going over to their income statement, we can see, how has their revenues been doing, and how has their net income been doing. So here I have their income statement, right? So in 2016, 27 million, 27 billion, 40.6 billion, or just 40 billion, 56 billion, 70 billion. So their revenues went up more than 100% in 4 years. And their net income went from 10 billion to 18 billion, almost like 90% up in 4 years. So the kind of growth that we are seeing in these tech companies is just unprecedented, right? So then, okay, great, revenues and expenses and net income, right? We see all that, but how did it impact my cash account, right? um, because you could be making a lot of money. Let's say you're being paid $100,000 in salary, but if your expenses are really high, your net cash savings would be lower. But if you are frugal and you're being careful and your expenses are low, you can save a lot of money, and there'll be more cash flow to you, right? So now let's go over to the cash flow, that how is the company really utilizing their earnings, and how is the cash flow being impacted. Sorry, I think I have too much going on over here. So here we have Microsoft's cash flow, right? Same thing. We saw this net income on the income statement, 16, 21, 16, 39, 44, right? But how is their cash? 33 billion, 40 billion, 44 billion, 52 billion. So they went from 33 billion in cash flow to 52 billion in cash flow. And then same thing, we would go down and we would see, is there cash flow enough to pay for everything, right? Um, so we saw this, right? 33, 39, 43, or 44, and then 52. And then main thing over here is their debt repayment, 2 billion, 8 billion, 10 billion, 4 billion. And then shares buyback. So they're buying back a lot of stock. Now, if the company is doing well and they're buying back stock, you as a shareholder might feel good that, okay, fine. But I personally don't like this. If the company has a lot of cash being generated and they cannot find good areas to really invest and really expand the business, then I'd rather see the money go back to shareholders as a one-time dividend. But this is where regulation comes in. The government needs to regulate this better, where they don't allow these executives to keep buying back their company stock. Let the shareholder make that decision, that do I want dividend reinvestment, and do I want the cash that the company is giving me back, do I want to reinvest that cash back into the company or not? So the prices could be going higher, and just by buying back stock, the price could go even higher. So $20 billion spent in 2019 to buy back Microsoft stock, which was almost at all times high, right? And then dividends going to investors. So out of 52 billion, 4 billion going towards debt, 19 billion or close to 20 billion used to buy back stock, and almost 14 billion going to investors. So that is 20, 30, close to 30. Sorry, drawing a blank over here. Close to 37 $37 billion, right? Of the cash being used. So let's look at Facebook. How have they been doing? So income, same numbers that we saw on income statement, but here's cash flow going from 16 billion to 24 to 29 to 36 billion in cash flows. So in 4 years, the cash flows went up $20 billion. So how have they been using their cash? They have no debt, and you'll see it on the balance sheet. And they have not spent too much money. Well, they spent a lot of money in in 2018 to buy back stock, and maybe because see, this is where the founder is the CEO, and he does not want to use too much cash to buy back stock. And this is when the stock was uh, had dipped, and we can go back and just take a look, um, take a quick look over here, Facebook. So here we have that chart again, and we can take a look that look at this. So in 2018, the stock took a dip from close to 200 down to 120 or 130 bucks, right? And now when we go back to the cash flow that we were looking at right here, we can see that the company decided to buy $13 billion worth of stock. And that's where it makes sense that the stock had dropped significantly, and the company decided to buy back a lot of stock, right? So these are the things. And then let's just go back to the balance sheet for Facebook and also Microsoft. So here we have Microsoft's balance sheet, right? And the most notable thing is look at their cash balance. Such a high cash balance, $134 billion in cash, right? But when we scroll down, one thing that I personally find a little discomforting, that a few years ago they used to have like negligible or maybe no debt whatsoever, and over the years their debt has just gone up, went from 40 billion to 76, but recently they've started paying off their debt. And let's say you as a single shareholder, this is what you own, right? So your equity went from 72 to 72 in 2016 and 2017, sorry, 2017 and 2018, and this is where it really picked up in the past 2 years, and the equity jumped from 82 billion to 102 billion. And when we go over to Facebook, um, their balance sheet, so their cash, you can see that it went from 30 billion all the way up to 54 billion, and they have zero debt. Going over to the liabilities section, they have zero debt. There is no long-term debt, and you as a shareholder, this is the line that you own, and your equity went from 60 billion to 74 billion to 84 billion, and now it's at 101 billion. So it went up almost 80%, and that's what we were seeing in net income as well, right? It went up 80%, close to 80% in the past 4 years or so. So this is what I wanted to share with you today, that before you go out and put money into a stock with no this is where conviction comes in. You could look at a chart. If it's upward trending, of course you could put some money in there, just like what we were seeing with some of these charts, right? We saw this. But when you are really looking at quarter over quarter financials, and you're seeing the increase in cash flow and the increase in revenue, um, so your conviction will be more. And when you see these dips, or these kind of dips, or these kind of dips, so right now, if Mark Zuckerberg was the only shareholder, right, and we would still have the ability to trade his stock, see how he's buying his own company back if the value goes down, because he knows the value of his company. So in 2018, he bought $12 billion worth of his own company. But in other years, he did not buy as aggressively during these years. Whereas Delta has been buying throughout over here. And Alaskan Airlines has been very frugal. And so these are the things that when you just look at a long-term trend from a chart and you go down to the financials and you look at the balance sheet, does the company have too much debt? You look at the income statement, is the revenue going higher? It's just like, think of it as your income statement, balance sheet, or cash flow. You are working, maybe you own your own business, or let's say you have employment. Year over year, is your salary going higher or not? Year over year, are you spending more, or are you being frugal and your net income is increasing or not? And then as a result, is the cash balance in your bank account going higher or not? And then finally, how does your balance sheet look? What kind of assets do you own, and how much liability or debt do you have against those assets, right? So at the end of the day, the only thing that you own is the equity, and is your equity increasing or not? And those things are going to be evident in these charts. um, and if the prices are going down, then the market sees some trouble, and they might see that maybe your balance sheet cannot support these tough times. Whereas when we look at Microsoft, so Delta dropped and did not recover, right? Or still has not recovered. Whereas when we look at Microsoft stock right here, look at Microsoft stock. It has recovered all the way back. And this is where conviction comes in, that if you know the balance sheet of a company, you can buy the stock right here, knowing because the balance sheet is bulletproof and it can withstand these difficult times. So this is what I want to leave you with, and I hope that going forward, you'll spend a little bit of time analyzing and researching these companies, because you have hard-earned money that you are putting and investing in these companies for the long term, and go with companies that are earning you more. It's just like, let's say you have an investment proposition of investing in two different uh, rental properties, right? Which one would you pick? You'd probably pick a rental property where there is more price appreciation in real estate in one area versus another. And then you will also, the other thing that you're going to look at, what is the yield that I'm getting for my money, right? Same goes when we make these investments. So such crises do present opportunities, such pullbacks do present opportunities, but the main thing to look at is how strong their balance sheets are to withstand certain shocks. So with that, I wish you are going to research more and learn more, and wish you all the best. Thanks. Bye.